Hi there, thanks for coming back to the channel. My name is Mike Pitt. I make videos on marketing, business and crypto so you can grow your revenues and increase your profits. It will come as no surprise to you when I say that the crypto markets have crashed. So I'm going to go to a screencast section of this video and then come back at the end. I'd appreciate any of your comments and feedback in the comment section below. Okay, so here we can see I'm on CoinMarketCap and you can see the current prices for Bitcoin. It's the 24th of January and Bitcoin is at 33,671, and the market watchers will know that that's more than a dip. It's a crash, and it's part of a wider crash across cryptocurrencies. So in this screencast part of the video, there's going to be two different sections. Section 1 will just list some of the major crashes of Bitcoin in the last few years, and then section 2 will list some of the reasons for those, some of the variables that have contributed to those crashes. So let's start. So this is, as I say, this is just a 7-day summary of Bitcoin price. What we should do is go so look at all data on Bitcoin, full screen actually. Let's go to full screen on that as I talk you through some of the, let's move myself over here so I'm out of the way. So this is Bitcoin from, actually you can see here, and it goes from 2013. And I'm going to go further back just with some of the information that I give you now. I need to go to another screen and just read out some of the highs and lows, if you like, of Bitcoin, because it's very important that if you're coming into the market to invest, you appreciate what the history has been for Bitcoin. So let's and I'm going to go into, as I say, this goes back to, at the moment, goes back to 2000 and so March 2013. But if I go further back, so in June 2011, Bitcoin price dropped 99%. In August 2012, it dropped 56%. And there are, as I say, I'll talk about some of the variables and some of the reasons why this happened in a few moments. In December 2013, 50% drop. December 2017, this is a period I know very, very well. December 2017 to December 2018, there's an 84% drop. March, and I'll leave the source for these dates in the description below so you can check that out for yourself and read the full article. March 2020, 50% drop. May 2021, 53% drop. So in answer to the question posed in the title, are market crashes or extended periods of lower activity, are they inevitable with Bitcoin? Yes, I think they are, and they are part of what you need to come to terms with if you're investing in cryptocurrencies. There are still massive opportunities, whether they be from the projects with the solid fundamentals like Bitcoin, Ethereum, Solana, Cardano, etc., or some of these meme coins, Dogecoin. And remember, this is not financial advice. This is all for entertainment purposes. You must do your own due diligence and make your own investments based on what you believe and what you're willing to put at risk in terms of your net worth and your portfolio, your crypto portfolio. So there's a whole long list there of periods when cryptocurrency led by flag bearer Bitcoin has crashed, and crashed by a large percentage. So people who've been holding those cryptocurrencies would have seen their on-paper value, on-screen values decrease by massive amounts, halved or quartered on some of those occasions. Now let's look at some of the reasons for these crashes, and I think we can just to change screen, let's go. So some of the reasons for these crashes are as follows. So the first one I'm going to highlight is, the first reason I will highlight is government intervention. So this can be positive or negative. Usually it's affected the crypto market in a sort of negative sense. And what do I mean by that? So currently there's the Federal Reserve, which for I'm in the UK, and for UK viewers, Federal Reserve is the equivalent of the Bank of England. So they have been considering their policies towards cryptocurrencies and Bitcoin, and are considering something that may have an impact on that, and they might raise the interest rates. And if they raise the interest rates, the cost of borrowing increases, and that might get investors nervous. So that might have a knock-on effect both on the stock market, not talking about the stock market in any detail in this video, but also on the cryptocurrency markets. So the Federal Reserve, government intervention in the US, particularly the Federal Reserve, looking to increase interest rates, can have a negative effect on the crypto market. And that's is one of the variables that are being considered. Just to counterbalance that, there are also positive acts of government intervention, and maybe we can talk about that in a different video, but I will give you one example now, just so you can bookmark this and investigate yourself if you want to. And that's the government of El Salvador gave Bitcoin, or granted Bitcoin, the right to be used as legal tender. So that's a very positive and strong signal for Bitcoin and also for cryptocurrency markets. So when something like that happens, investors are more confident about the future of Bitcoin and crypto assets in general, and then the price of Bitcoin more likely is or no other sort of variables that counteract that would increase the price of and the perceived value of Bitcoin would increase. So you see, government intervention can have an effect on crypto market crashes. Also, more than just intervention, there can be a prohibition, and what I mean by that is a country may ban cryptocurrencies. So recently we've had the occasion where Russia has banned cryptocurrencies. So in the effect on the market, the crypto markets, is obviously a removal or a decrease in confidence for investors. So when that happens on the global stage, then usually the price of Bitcoin and the price of cryptocurrencies will go down. So that's another impact on whether the crypto markets are crashing or whether they seem to be buoyant. And as we move from sort of bullish market to bear markets, another factor is the movements, and these can be positive or negative. And this really just, if we go back to the list that I gave of those instances where Bitcoin has had a crash and lost large percentage points in terms of its value. I remember in December 2017, institutional investors became involved in the Bitcoin markets and obviously Bitcoin trading, moving large sums, billions, in and out of the Bitcoin trading environment. And what that means is that the large institutional investors who are moving much larger funds than anyone else can have a massive impact. So we saw in December 2017, price of Bitcoin went up, I think at the time, to record levels, which was about 19,000-20,000. And then by early 2018, it was down to 5,000 or 6,000. So institutional investors can have a massive impact by moving large amounts of funds in and out of Bitcoin. So that also has an impact. What is positive about Bitcoin is obviously there's a finite supply of Bitcoin, and there will become a time when there are no new Bitcoins available. It's still being mined at the moment. I think there are 18-19 million in circulation. The total amount of Bitcoins forever will be 21 million. So we're getting closer and closer to that total. So given that if the demand still stays high, the price will, if demand stays high, the price will rise in the long term, because there's a finite supply. So that's something that's very much a plus point, something that all crypto asset investors have in the back of their minds when they weigh up the potential future for Bitcoin compared to, say, other crypto assets. Okay, so there are a number of variables there. So all of this means that the road for investors is not necessarily clear when it comes to cryptocurrencies and when it comes to Bitcoin. So you need to bear this in mind. It is a high risk asset class. The potential for gains is huge, but also the risk is there, and you need to be aware of that. I made a point of going through all of those crashes, market crashes that Bitcoin have had, just to demonstrate, yes, that if you're into crypto asset investing, you should be well aware that crashes are around the corner, and you need to take a long-term view, as I mentioned in my last video, and avoid emotional investing. So I'll put a card on the screen about my last video, relating to my last video about how to avoid emotional investing. You should watch that video if you haven't watched it already. But it's not too late to get involved, but you need to be aware of the risks, and you need to be aware that market crashes are inevitable. I think in the future, and this is just my opinion, when we get to a stage of mass adoption of cryptocurrencies, and Bitcoin being the flag bearer, as I've said, then perhaps these market crashes will not be as severe and not move sort of 50%, 70%, 80%. There have been drops of huge percentages in just a few days. Perhaps those, or market corrections, people might call them instead. Perhaps these will stop happening, or will happen to a lesser degree when crypto assets are widely adopted. In the UK, it's still only 3.86, and I use this figure in one of my recent videos. Please go ahead and watch that. Only 3.86 of adults are actually invested in cryptocurrencies. In America, in the US, it's up to 26% of adults. So you can see if UK investors were just to catch up to America and move from sort of 3.86 to 26%, there's huge potential there for movement in the markets, and people who are involved and invested have a wonderful opportunity to make gains. So thanks for watching this. I just wanted to talk about the inevitability of market crashes and also list some of those market crashes. I'll now go back to the webcam view. What do you think? Do you have the stomach and the fortitude for the cryptocurrency markets? It's not for everybody. Obviously there are great opportunities there and there's profits to be made. So if you have watched my other videos, then you can see that there are some ways to mitigate some of that risk in entering the market, but you have to take on board, as I've said in the screencast section of the video, you have to take on board the fact that there is risk involved and crashes are part of the process. Thanks for watching all the way through. What do you think? Is it a market that you're able to operate in, or are you put off by the inevitable market crashes that I talked about in the screencast section of this video? If you've liked this video, give me a like. Please also share and comment down below. If you want to watch one of my other videos, please click on one of the screenshots coming on screen now. I look forward to speaking to you next time. Thanks. Bye bye.